Hello everybody, this is Parviz Nazir. Today we'll learn about theory base of accounting. Generally accepted accounting principles. Generally accepted accounting principles refers to the rules or guidelines adopted for recording and reporting of business transactions in order to bring uniformity in the preparation and presentation of financial statements. So I think generally everybody is kind of aware that to do any kind of activity we would have certain principles that needs to be followed. So this is very much in accounting also, we need to have certain principles that is to be followed, and these principles are also referred to as concepts and conventions. So the first one is business entity concept. Here the concept of business entity describes that business has a distinct and a separate entity from its owner. It can't be treated that the owner of the business and the business is the same. So the main purpose of this accounting is that the business and its owner has to be treated as two separate entities, never from a point of a proprietor itself. Generally, while making decisions with regard to the assets, liabilities, or capital, revenue, or expenses, all this should be taken from the business point of views, not from an individual point of view. Money measurement concept. So the concept of money measurement states that only those transactions that happens in an organization which can be expressed in terms of money, such as sale of goods or the payment of expenses or the receipt of income, these are only can be recorded. If at all it cannot be measured in terms of money, we cannot be considered to be doing an accounting for that. The next one is going concern concept. The going concern concept assumes that a business firm would continue to carry out its operations indefinitely and a very long period of time. There is no expectation that it get liquidated in any time future. That is the most important assumption based on which the accounting is supposed to be happening. So that is when we will be able to value the assets in the balance sheets, and we can know what is the loans that we have and what is the time period to pay for it and all those. So moving to the next point, which is about accounting period concept. I think if we all can think back, for everything we need to have a particular period, or we would have a certain number of timeline which we need to put to kind of look at. If you want to look at the sales, you would like to see what is the sales for this particular period, or for a quarter, or for a year. Similarly, accounting period refers to the span of time at end of which the financial statements of an enterprise can be prepared to understand what is the earned profits or what are the losses that have been incurred, to know what is the exact position of its assets and liabilities at certain particular time. The cost concept. The cost concept requires that all the assets are to be recorded in the books of accounts at their purchase price. This includes also the cost of acquisition, the transportation, the installation, and making the asset ready to use for the operation. Dual aspect concept. Dual aspect concept is the foundation or the basic principle of accounting. It provides a very basis for recording business transactions into the books of accounts. This concept states that every transaction has to have a twofold effect. It's like when you take a look about the assets, that should be nothing but the contribution of total liabilities plus the capital what has been invested. So it should have both a debit and a credit to every transaction. Accounting concepts. Revenue recognition, or I would call as a realization concept. This concept of revenue recognition requires that revenue of a business transaction should be included in the accounting records only when it is realized. So here are two questions that arise. One is, if at all I can give an example, I would tell that we are going to make a sale of 10 lakhs. Here the first example is like, I'm going to make a sale but I have not made it, so I cannot consider that as a transaction. I cannot record that into my books of accounts. The second one is, we have made a sales of 10 lakhs this period. This is the revenue that is we have realized. The matching concept, or I would tell matching the revenues and the expenses. The matching concept emphasizes expenses incurred in a particular period should match with the revenues during that particular period itself. It follows that the revenue and the expenses incurred to earn these revenues must belong to that particular accounting period, which is when we will call this as a matching accounting concept. Accrual concept. The accrual concept states that future consequences of a transaction arises when a transaction is entered into the books of account. So transaction must be brought into record whether they are settled in cash or not yet. So I would kind of take this as an example where if at all I need to pay rent for my store, even though I have not paid, I need to record that as an expense already because I'm getting to close that particular month. If I do not record that particular transaction for that particular month, then I'm doing an incorrect accounting. So that's where it tells that if there is a legal right to receive them, though cash might not have been received for the same. Objective evidence concept. The objective evidence concept means that all the accounting entries should be developed and supported by source documents. So we remember we discussed about voucher. For every transaction there should be a voucher or a documentary evidence which we call as an invoice or a bill, any of such kind of a thing which can be proof that yes, this transaction has happened. Moving further, apart from the accounting concepts, we also have accounting conventions. The convention of materiality of convention requires that accounting should focus on the material facts, and there are a lot of scenarios that we could be wasting a lot of time trying to make the accounting very complicated. Imagine that I have bought 50 pairs of 50 pens. That 50 pens I can record, for each pen I can record one transaction, or I can record as 50 pens bought for this particular price. So instead of writing for each particular pen, I can record 50 pens bought. So that is something which can tell about the materiality concept. Convention of conservatism. Convention of conservatism provides guidance for recording transactions in the books of accounts based on policy of playing safe. So here it's more about trying to ensure that if you know that there is a risk that is getting involved in the business, we need to really look about that and try to this one. We cannot overstate our profits. We Until we make our profits, we can never make our uh, we can never record that as a profit, so until it's been achieved. But whereas when we see any risk in the business, we can consider that as a risk that might come in and we can provide a provision for it, but not for a profit that we can tell that okay, I'm going to make. Only unless and until I have made that much profit, I cannot record that into the books of accounts. Convention of full disclosure. The principle of full disclosure requires that all material and relevant facts concerning the financial performance of an enterprise must be fully and completely disclosed in the financial statements and their accompanying the footnotes. So it's very important that any financial statement that has been provided, it should be a full disclosure of the company. It cannot hide any kind of facts. Convention of consistency. This means that the accounting practices and the method should remain unchanged. So I can give an example of last year we would have been following a straight line method of depreciation, and suddenly this year we are changing the method of depreciation. So we cannot keep doing that. It cannot have such a great change in the ways of working. So we need to have consistency in what we are trying to follow. Systems of accounting. So there are two types of systems that we use. One is a single entry system and the other one is a double entry system. Single entry system is more like a bookkeeping, which is not a complete record of each and every transaction. We could also tell it as accounts from incomplete records. Whereas a double entry concept should be recorded in the books of accounts. This is more to record a debit and a credit aspect of every transaction, which is very important. It records the receiving value and the giving value in the system, which is very important to do accounting. What are the features of double entry system? Both aspects of the transaction are recorded in the related books of account. Every debit has a corresponding credit and every credit will have a corresponding debit. The debit and credit would appear simultaneously in two different ledger accounts on opposite directions. This method is also called as dual aspect concept. Total debits must equal to the total credits. What are the basis of accounting? There are two ways we can do the accounting. One is the cash basis and another one is accrual basis. Cash basis involves incomes and expenses where we make a cash transaction, we make the immediate payment for it, and that is how the transaction is recorded, where it is not too complicated to do this kind of accounting. Whereas accrual basis, income and expenses are recognized when they occur rather than when they are actually received. So I was giving you an example about the rent, that I'm due to pay the rent for this particular period and I have completed. Though I have not paid, I need to record that as a transaction that it's going to occur. Accounting standards. The Uniform, Definite and Universal Accepted Accounting Rules developed by International Account Standards Committee was formed in 1973 with 16 accounting bodies from 9 different nations who were the founder members of this accounting standards. So recognizing the need of this, even our Indian Institute of Chartered Accountants of India has constituted an accounting standards board in April 1977 for developing accounting standards. So I will be coming back with more on accounting standards in more detail. So till then, thank you everybody. Thank you for your time. Have a great day.